Hi, I'm Whitney Belker with Miami's Global Connection. Our show is sponsored by the Greater Miami chapter of the United Nations Association of the U.S., otherwise known as the UNA. The UNA is dedicated to promoting the ideals of democracy, trade, education, healthcare, human rights, and peacekeeping. Our show is designed to raise public awareness of the interdependent world in which we live. We focus on leaders who are involved in diverse international issues and projects. Today our guest is John Geraci, Managing Director of Meridian Capital Partners Bank here in Miami. John has been active in investment banking, money management, and merger and acquisitions for the past 18 years in the U.S. and worldwide. Today, we will discuss John's insights on investments and private equity markets in Latin America. Thank you for joining us today.
My pleasure.
Well, first of all, if you could just give us a little background on Meridian Capital Partners, the kind of work that you do.
Certainly. Meridian Capital Partners is a money management firm that manages money on behalf of institutions, banks, and large private investors who are looking to invest primarily in privately held companies.
Great. So you've been working in the international markets for a long time, I believe with a focus in Latin America and emerging markets, correct?
That's correct, yes.
Why did you pick emerging markets?
Well, going back to our genesis, the emerging markets have offered tremendous yields. And if you were to go back to the beginning of the euro-dollar market, or the euro-bond market, yields in emerging markets instruments, debt and equity was phenomenal.
So you're saying you can make a lot more money in emerging markets?
That's very simple, yes. In a very simple way, yes.
So how does it differ to work in investments, say in the U.S. versus in Latin America or emerging markets? What are the things that you have to be aware of and cautious of?
Well, the differences are dramatic. There's obviously, you have the language, you have the currency, you have the culture, but most importantly you have the laws and different laws. So I think the difference is in Latin America and in emerging markets in general, you just have to be a lot more sure of what you're doing, and you've got to be a lot more careful.
Okay. So you've been investing, but what kind of deals have you been pursuing, and what kind of changes and trends have you seen in these markets over, say, the last 10 years?
In the last 10 years, our focus has shifted from purchasing investments in, let's say, derivatives or instruments like euro bonds and euro dollars to actually investing in privately held companies.
Can you give us an example of a typical deal that you've done, say, in the last few years?
A typical transaction would be sponsoring local investors who would be doing
local where?
Local, let's just say in Argentina, who are developing a large hotel project where they would require some $30 to $50 million of additional equity. And we've done that on several occasions, and most recently in Buenos Aires, a hotel development with a very well-known designer, Mr. Philippe Stark, who has some projects here in Miami as well. And our involvement in that was basically to put a certain amount of the equity in.
Yeah, you arrange for the financing.
Arranging for the financing and arranging for debt as well.
And why, in Latin America, we know that many of the companies have been strapped for cash. What can you tell us about the financial scenarios in many of the Latin American emerging markets?
Most of the companies in Latin America have gone through metamorphosis, if you will, over the last 10 years, where they've seen the currencies drag through the mud. They've seen the World Bank on and off as far as supporting the local economies, and political leaders have come and gone in a revolving door, especially in countries like Argentina. So I think what's happened is they've had to get a lot more creative. Business owners and people looking to do business in Latin America have had to get a lot more creative with the way they do things. It's very typical when you think about a Latin American banker or a Latin American investor. They have made most of their money on the arbitrage situations. Very few of them.
Excuse me, what does arbitrage mean?
Arbitrage would simply mean I find an anomaly or a difference between a stock on one market or another, or in most cases the currency. A very good example of that would be
you mean between like a peso and the dollar,
the peso
or
and the dollar,
bolivar,
right? Or instruments in pesos or in dollars. For example, in certain countries, from time to time, you'll find you can buy local currency debt instruments that will pay you a much higher rate than you will in a dollar-based. So there's an arbitrage opportunity if you know how to hedge between the local currency and the dollar. And so for a long time, banks were taking U.S. dollars at low rates and lending them locally at much higher rates.
Wow. So, first of all, let's backtrack.
Okay.
When we talk about investing in Latin America, as you know, there's a lot of criticism. Oh my God, the markets are so volatile, the political environment isn't strong enough to enforce regulations, the legal framework in some incidences have been, criticized for not having the proper instruments to regulate and, I guess, govern contracts legally in the right light.
Yeah.
So, why have you pursued doing business in Latin America?
Well,
given
because there are certain anomalies that you can take advantage of, and to be fair to the leaders of the Latin American countries, they've come a long way from where they were just 10 years ago.
Okay, tell me about that.
Well, 10 years ago in Argentina, say not 10 years ago, say in 1992 in Argentina, if you went to any of the exchange houses which were actually trading physical currency, they used to weigh it rather than count it.
What's that?
They would weigh the money rather than count it because inflation was so high at 6, 7, 10% per day. To spend your time counting the money, you would actually losing money.
I mean, how much money are we talking about?
Well, you're talking about the entire black market exchange of the Argentine economy.
Okay, please elaborate a little more because this is very interesting to me.
When no one wants to hold a currency, for example,
we're talking about pesos. We're talking
about the Austral back then.
Okay.
Then the currency was the Austral.
Before my time.
Before your time. The Austral was the currency, and the Austral was experiencing 20 to 30% inflation per day. So no one wanted to hold the currency. Why? Because tomorrow it was worth 28% less than it was today. So what you did was you traded it. And you created a cottage industry of casa de cambio, the exchange houses, which basically moved money around, and that was an arbitrage opportunity.
So there's an opportunity to make money on each one of those transactions.
Absolutely,
correct?
absolutely,
okay.
Absolutely. Fast forward a little bit, Mr. Menem's regime had come in, and basically came the peso, and then the talk of the peso being tagged and pegged to the dollar, and people began to have confidence in the peso, and the peso stabilized, and it became an actual unit for trade.
And a more stable environment for foreign direct investments, and I
Absolutely.
believe your firm was very active not only in Argentina but throughout the region during that period.
That's correct, yes.
Didn't you manage an investment fund for technology companies?
Yes.
Or?
From 1996 to around 2000, we focused on technology companies in Latin America. What people don't realize is that Latin American economies, the Latin American cultures, are highly educated. The universities in Argentina, the universities in Brazil, the universities in Chile, just those three countries, not to mention Venezuela, Colombia, etc., have very good training programs and exceptional universities.
Well, I think that's probably very true for the middle class and upper middle class, but in comparison to, say, the U.S. market, which many of your viewers are most familiar with, there still is a very large gap in both education and poverty.
That's the truth, as it is in this country as well.
True. Okay.
So we took advantage of making investments in technology companies which had unique, defensible, I say defensible meaning that they were unique technologies that applied to the markets that in Latin America, and we made a lot of investments, and frankly we made a lot of money during that time. However, as happened in this country in 1999 and 2000, there was a crash in the technology sector. It happened there as well, and perhaps it was even more dramatic there because the high they were feeling was much higher and the low was much lower.